Hey everyone, welcome back to the Zeta Capital. So in this video, I'm going to give away one of my trading strategies for absolutely free. This strategy is actually based on the ICT concepts, but it has a little twist in it, okay? You don't need to know the daily bias. You just want to follow the rules strictly. And trust me, after watching this, no one can stop you from becoming profitable. Let's get straight into the video. So the very first rule is you need to identify ABC pattern liquidity sweep. Now, what is an ABC pattern? Basically, I was going to explain this in my upcoming mentorship, but it's fine. I'm going to teach it now right here in this my YouTube video. So what is an ABC pattern liquidity sweep? Let me show you. So this is the A leg, and then we got the B leg, and then we got the C leg. This is very simple. Now we have A and B and C, right? So the C leg is a liquidity sweep, okay? It sweeps out the high as you can see. So this is a sort of A, B and C pattern. So the A leg is a trend in one direction, and then the B leg is a small trend in the opposite direction. Okay. And now by a small trend, I mean a few candles. Okay. I don't mean like a huge trend. So the C leg is the movement in the very first direction. The A leg is the move in the first direction. B leg is the move in the opposite direction. And then the C leg is once again move in the first direction. We got A and B and C. So the C leg takes out the liquidity. So this is called ABC pattern. Now this is the sort of pattern you need to look for once you have identified this pattern. On a 15-minute time frame during London or New York session, if you guys don't know how to spot a session or what session is actually going on, you can use an indicator and I use Open the indicator section and then type the FX and Asian range, and then you just need to put this on. It's going to just show you at what specific times a session is going to start. So what is the rule number 2? The candle that sweeps liquidity should be the lowest or the highest out of the range. And now you need to understand this very carefully. We have the A leg, B leg, and then the C leg. So this is a point where price goes above it, and the very first candle that sweeps the liquidity, okay, and then closes. I don't want to see another candle go above it, okay. Let's suppose we have this one candle, it goes above that, and then it closes. Once the candle closes, I don't want to see another candle wick above that candle, okay, or just close above that. I want to see price go down into the into our range, okay. I do not want to see another candle go above that candle, if that makes sense. I'm gonna try to explain this thing once again, okay. So you need to understand this carefully. The C leg, okay, the very first candle that goes out of this range, and by range I mean liquidity sweep. Okay, when price sweeps the liquidity, the very first candle should close, or it can just wick and then come down and close. Now I don't want to see another candle go above that wick. I want to see price coming down into our range. I do not want to see another candle go above that. I want to see price directly back into our range. I hope it is clear now. If it is not, let me know in the comment section. I'm gonna try to explain it there too. This is very simple, and I'm not going to show you example. You are going to understand it. So what is the third rule is to wait for the change of character or on a smaller time frame within the range, okay. So once the candle closes, let's say the candle closed here, now you need to drop to the 1 minute chart, and on the 1 minute time frame you are going to see a structure like this. So we want to wait for a change of character. There would be a bearish candle right around here. Now this could be considered as a change of character as well. You do not want to look for lows or highs. It could just be one candle, okay. This is considered structure shift, okay. Let's suppose this is the low of the candle. Price breaks the structure. Once it breaks the structure, and one more thing, this is not a valid structure. But why? Because it came back after taking out the liquidity, and then it made another high for me. I want to see this one break, because this was the actual structure before the liquidity sweep. Now suppose it breaks this one. Now this is the valid market structure shift, because this structure was created before the liquidity sweep. I am going to show and explain it more properly when I'll show you the examples. Alright guys, now coming to our fourth rule. When you are on a smaller time frame, then you need to have your entry at the extreme fair value gap. You don't want to be use that first failure fair value gap. You need to use that extreme FVG, okay. you are definitely going to miss the trades, but it is what it is. I mean, it's the best way. Okay, let's say you have a fair value gap around here, and now you just have to now set up your limit order, and then you want to wait for the price to reach that fair value gap, and boom, this is your entry. And now where you want to set your target, it should be the low of that B leg. We have discussed this earlier. Now risk management is totally upon you guys. I am not gonna teach it, but this is where your take profit should be. Now you don't want to go to break even. This is not how the things work. Go break even when any of the structure gets break. Yeah, this is the very simple way. And I'm gonna make an yeah. So here we are with an example. See, this is the A leg, this is the B leg, and this was the C leg, and it just swept that thing. So swept this high. So we'll take this as C. Okay, yeah, like this. So wait, let me go to that 1 minute time frame, and I'll show you how the things are looking like. Just I'll let me mark that low of that B. It won't create any confusion. Hold on. Yeah. So let me go into 1 minute time frame. Yeah. See. Can you see this, that liquidity got swept? So see, I just told you, like, this would be that actual structure shift, but I would not mind taking this because see, can you see this? Because in this leg, this our high of the B liquidity got swept. Okay, so I'll actually take this one as my market structure shift. Yeah, let me type it. Okay, so now after the market structure shift, we guys are probably waiting for that extreme FVG. Okay, so can you see this? This is a fair value gap exactly here, and here. Okay, let me just extend it. Yeah. See it. This extreme fair value gap exactly got filled at our extreme POI. Okay, so what I told you guys to just put a limit order and enjoy the move. Okay, so let me put here my order. SL just above this high. And what was my target? I told you that low of B leg. Okay, low of that B leg. Let me mark that. See, the low was here. Okay, exactly here. And let me go to that 1 minute again. Yeah, see, we got tapped, and yeah, our target got hit. It's like nothing. See, this is a masterpiece. This is a gem. What I have just showed you right now, like 1:8 RR. It was in what, like, only within a day. 1:8 RR. What a trade! What a precision, and what a trade!